I mean, chugging is no longer a word that we should use for them. It's the highest speed rail probably that we are witnessing here. These stocks have surged, what, 80-90% in a matter of few weeks itself. And of course, if you look at a one-year move, these stocks are up anywhere between, 3 to 5 times. That's the kind of big rally that we have seen. And yes, of course, the government's Capex has gone up, and there could be that pre-budget momentum which is building up. But I don't know what explains the kind of move that we have seen over the last 1 month, because not that these companies have bagged some huge orders in the month gone by, or there are some big allocations coming their way, at least nothing, and on the anvil as of now. But the market capitalization of these companies has increased multifold in the last few months itself, and the valuations too have become quite punchy. IRCTC, for instance, is sitting at a valuation of 65 times. The company does the business of just booking the tickets and probably some amount of catering, etc. So it's a low margin business, but still it's trading at 65 times. You also have IRFC, which crossed the market capitalization of over 2 lakh crore rupees. It's higher than the likes of M&M, Bajaj Auto, and a lot of nifty companies. The book size isn't that large, but not sure, Nikunj, what Street is factoring in. And is this something which is warranted or completely over enthusiasm at this point of time?
Okay, we are talking about railway stocks, but just remind our viewers that all railway stocks have different businesses. So every business is in a different, perhaps, cycle, so to speak. So just because it is railways, I think the stock should not qualify to go up or go down. But when there is frenzy, when there is excitement, when there is complete disregard for the underlying business, and so that's what happens in the market. Bull markets are strange things, and markets can just remain irrational for longer than you can remain solvent. So there is no point in trying to preempt that, okay, this is the red line and this is what the stocks will do. And if they go above these levels, it's not going to go further. Market cycle has always told us that strange things can happen. Right now there is a rising tide phenomenon. But what you can do, you can ask yourself one simple thing, that if I don't sell now and if I buy now, what is the risk reward ratio for me? The risk reward ratio for buying these stocks now, I think, is just not in your side. If you don't intend to sell, well, that's a call which is purely based on the fact that you need to be prepared for the fact that these stocks can just turn. They may not turn for next few days. They may not turn for another 1 month, so to speak. But when the turn is going to happen, trust me, this is a stock where institutional investors are not going to be rescuing you, looking at the valuations and looking at the core fundamentals. So if you own the stocks, if you can fasten your seatbelt and say, okay, I'm going to ride the momentum, I may make another 10%, but I will digest a 15-20% volatility, I'm prepared for a sharp turn, then you should buy them. But frankly, if you're looking at a fresh capital allocation into these stocks, let me assure you, based on my experience, when I've spoken to everybody, there are far better options in the market. Look at IRDA. 35 rupees has become 140 rupees. It absolutely amazes me. It absolutely amazes me. 150 rupees. So it's a 5x in less than 6 months. Issue price was 35. It's become 150. So it's a rising tide phenomenon. For those who are part of it, well, you can enjoy the joyride. But if you think that you can jump in now, well, you're late to the party. The train in this case has literally left the station.